Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And it's Monday, March 13th, 2023. The Federal Deposit Insurance Corporation said that starting Monday morning, depositors at Silicon Valley Bank will be able to access their money completely. The FDIC confirmed that deposits had been successfully transferred to a new bridge bank. This new bank, named Silicon Valley NA, will be run by the FDIC. It will have regular business hours, and customers have been automatically moved to this new bank. Now, that's according to a statement released by the regulator on Monday. The FDIC stated that all depositors will receive their full funds. They also said that taxpayers won't incur any losses due to the bank's resolution. On Sunday, banking regulators approved the transfers using provisions meant to safeguard the financial system from contagion. The FDIC became the receiver of the failing bank on Friday. They also appointed Tim Mayopoulos as the CEO of Silicon Valley Bank NA. Mayopoulos previously served as the president of Blend Labs and CEO of the Federal National Mortgage Association. According to a recent filing, HSBC UK Bank will acquire Silicon Valley Bank UK for £1. The filing disclosed that as of March 10th, SVB UK had loans worth approximately $6.6 billion and deposits worth approximately $8.1 billion. HSBC Group CEO Noel Quinn expressed that the acquisition of Silicon Valley Bank UK is a strategic move. Quinn said that it would strengthen their commercial banking franchise, enabling them to better serve innovative and fast-growing firms. Particularly true in the technology and life science sectors, both domestically and internationally. The sale was announced on Monday and was facilitated by the UK government's resolution powers. Their role is to wind up failing lenders without causing instability to the financial system. On Monday, Finance Minister Jeremy Hunt assured that deposits will be protected without any need for taxpayer support. He stated that he had taken urgent measures to support the country's tech sector. On Friday night, the Bank of England tweeted that Silicon Valley Bank UK would be placed into insolvency. However, the lender had a limited presence in the country. USDC's crash has caused concern about stablecoins. On March 13th, Binance's CEO CZ tweeted that the exchange will be converting the remaining $1 billion in its industry recovery initiative to native crypto due to changes in stablecoins and banks. CZ listed Bitcoin, BNB, and Ethereum as the native cryptocurrencies for the exchange. He shared links to the hash IDs for Bitcoin and Ethereum transactions and mentioned that it took 15 seconds to move $980 million with a $1.98 transaction fee. After CZ's announcement, crypto Twitter had mixed reactions, with some praising the decision and calling it pure gold. Others were skeptical of the decision to sell the BUSD stablecoin and to convert the funds to more volatile assets. Meanwhile, Coinbase also made an announcement on March 13th. They posted on Twitter that they would stop trading the BUSD stablecoin. Coinbase explained that on February 27th that they would stop trading BUSD on March 13th. They said the decision was made because of their listing standards. Their announcement read, "We regularly check the assets on our exchange to make sure that they meet our listing standards." They reviewed BUSD recently and found it did not meet their standards. Therefore, Coinbase said they would disable trading for BUSD on March 13th, 2023, around noon Eastern Time. Coinbase's decision to stop BUSD trading applies to Coinbase.com, both simple and advanced, as well as Coinbase Pro, Coinbase Exchange, and Coinbase Prime. On March 13th, Coinbase told their customers that they would still be able to access their BUSD funds and withdraw them whenever they want. When Coinbase first announced its plan to stop BUSD trading on March 13th, they said, quote, "Our determination to suspend trading for BUSD is based on our own internal monitoring and review processes. When reviewing BUSD, we determined that it no longer met our listing standards and will be suspended." Circle has a new commercial banking partner, Cross River Bank. Cross River Bank provides services to fintech and crypto firms like Visa and Coinbase. They will provide and redeem USDC. Circle also expanded its relationships with other banking partners to help with USDC redemption. One of these partners is the Bank of New York Mellon. Bank of New York Mellon already provides custody service for Circle's reserves. USDC lost its peg over the weekend, falling below 90 cents, but banks and regulators took action to restore confidence in the token. As of now, USDC has recovered and is trading at 99 cents each. Circle issued a press release during the weekend assuring that 100% of USDC reserves are safe and secure. The company also announced the transfer of the remaining Silicon Valley Bank cash to BNY Mellon. Circle said liquidity operations for USDC would resume when banks open on Monday. Circle clarified that it has no exposure to Silvergate. That was after Silvergate announced it would liquidate its holdings as part of a takeover process by federal regulators. That seems to be going around lately. Meanwhile, Gemini did some FUD control. They said in a tweet today that they didn't have any funds at Signature Bank. Additionally, the company's stablecoin, unlike USDC, GUSD was not supported by any deposits at the bankrupt bank. Gemini also mentioned that it had worked with Signature Bank in the past. They said that they were good partners in the industry. However, the exchange confirmed that all of their current reserves are held in 3 different U.S. banks: State Street Bank, Goldman Sachs, and Fidelity. Gemini added that it is closely watching bank counterparty risk to ensure that customer funds and the support for GUSD are not affected. When USDC lost its peg due to the Silicon Valley Bank collapse, that led to concerns that other stablecoins like GUSD might lose their pegs as well. However, as we already know, USDC has regained its peg. Gemini stressed that their GUSD coin is supported by dollar reserves, clarifying that they are a full reserve exchange and custodian. This means that all customer funds and GUSD reserves are held 1-to-1 on Gemini and can be withdrawn at any time. BCB Group is a company in London that offers payment services and business accounts to crypto firms. Now, they had a plan to start a program to allow US dollar payments. However, regulators shut down Signature Bank, causing BCB Group to stop their program. Now, earlier this month, Silvergate's Silvergate Exchange Network was also shut down, and BCB Group's founder and CEO, Oliver von Landsberg-Sadie, said that they would release any US dollar payment tools to fill the void. The CEO revealed that the company had 6 clients who were prepared to test their system as part of a limited pilot program. On March 10th, they completed their first instant US dollar transaction. However, BCB Group's program relied on Signature Bank, which was taken over by state regulators on March 12th, which is causing a problem for that program. According to the CEO, BCB Group relied on Signature Bank for trade settlement and US dollar payment accounts. These services must now be put on hold until new partnerships can be established. However, BCB Group's payments products in other currencies remain unaffected. Von Landsberg-Sadie remains optimistic that the 3 new U.S. bank relationships will provide continuity for their clients. He acknowledged that they will need to accelerate the process given the Fed's views on cryptocurrency. The Federal Reserve, Treasury Department, and FDIC released this joint statement after taking over Signature Bank. They assured all depositors that they would be compensated and taxpayers wouldn't suffer any losses. Von Landsberg-Sadie remains optimistic about BCB Group's ability to find 3 new crypto-friendly banking partners in the U.S. Despite the current climate, he believes that the partnerships could be live within 4 to 12 weeks. The International Monetary Fund cautioned the Group of 20 nations that crypto assets could cause banks to lose deposits and reduce lending. The IMF shared their report on the macro-financial implications of crypto assets with the G20 during a meeting in India in February. The report was released publicly on Monday. According to this report, if there is a widespread increase in crypto assets, there are substantial risks for monetary policy, exchange rate management, capital flow management measures, and fiscal sustainability. Additionally, there may need to be changes to central bank reserve holdings and the global financial safety net, which could lead to instability. Finally, banks could lose deposits and have to limit lending. The report was created after helpful discussions with the Indian Ministry of Finance and international focus group participants. As a result, the G20 decided to create global crypto rules. These rules would be communicated through a synthesis paper jointly produced by the IMF and the Financial Stability Board. The framework for this paper has not yet been established. The report pointed out that crypto assets carry many risks, but the importance and relevance of these risks vary by country circumstances. The report emphasized the need to gather more data and to help create policies around crypto assets. Additionally, despite the notable risks, the report acknowledged that crypto assets have developed technologies that the public sector could use to pursue its policy objectives. Coinbase reports that it has seen a document that says that if a digital euro is considered legal tender, merchants in the euro area might be forced to accept it. This would give the central bank digital currency the same status as banknotes and coins. Now, that means that payments made by using the digital euro would legally fulfill obligations to pay, and that merchants would have to accept it at its full face value. The Secretariat of the Eurogroup has drafted a document that says that if the digital euro is given legal tender status, certain payees would have a legal obligation to accept payments made in it. This would increase the digital euro's network effects and potentially affect its distribution. The document also asks finance ministers whether exemptions should be considered to ensure proportional application, balancing the principles of contractual freedom and mandatory acceptance. The paper will be discussed at a monthly meeting. Now, during a discussion in January, finance ministers stated that the digital euro should not be programmable. They argued that giving recipients the ability to limit how payments are used would damage the fungible status of money. Officials from the European Central Bank are currently working on technical details, such as prioritizing potential uses, as they prepare to make a formal decision about issuing the currency in digital format this fall. In order to establish the central bank digital currency, legislation will need to be agreed upon by the EU national governments. Maureen McGuinness is a representative from the European Commission, and she recently confirmed that a bill will be introduced soon to examine legal tender status, as well as anti-money laundering rules and compensation for those distributing the currency. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, please like, follow, subscribe. Leave a rating or review. And in the meantime, we'll see you tomorrow night.